Welcome back to Alpha Recap, your after-hours market breakdown. We're looking at what the tape delivered today after the close on April 22nd. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from today. A clear tech-led risk-on day, some sector rotation, and a few corporate headlines that moved things.
Let's hit the headlines up front. The S&P 500 ETF finished the day up about 1%. The Nasdaq 100 ETF led the charge, up roughly 1.7%. And the small-cap Russell 2000 ETF gained about 0.75%. So tech outpaced, small caps participated but lagged. Big picture?
Right. It was a classic risk-on session where large-cap growth and technology led. So, money rotated back into mega-cap growth and AI-related names after some easing of geopolitical headlines and a few company-specific catalysts.
The note about geopolitical easing, that was a morning headline about a ceasefire extension, correct?
Yes. Morning headlines talked about a ceasefire extension, which reduced some of the risk premium priced into markets. In plain terms, a little less headline fear, and traders felt comfortable taking more duration and growth exposure. So, long-duration assets got a bid.
So that was one spark. The other big one was corporate news flow. Apple made waves, and there was an earnings beat from a partner in the NVIDIA ecosystem. Talk me through how that shaped sector flows.
Sure. Apple announced leadership changes that signaled a renewed hardware focus. That renewed interest in the supply chain, chip suppliers, component makers, hardware vendors, and helped lift related names. Separately, a partner of NVIDIA reported results that beat expectations, which kept AI adoption narratives alive. That combination pushed software, semiconductors, and selected hardware stocks higher.
Right, and to add to that, some pure-play AI names pulled back intraday after quick gains.
Exactly. There was some profit-taking in a highly correlated AI name. Nothing that derailed the broader tech complex, but it showed investors distinguishing between durable AI revenue streams and short-term event-driven moves.
Yeah, that tracks. Quick reaction. Tech-led, but it wasn't a uniform breakout across everything. We saw sector rotation. Give us a tour of the sectors that stood out.
Technology and communication services were the top leaders. Within tech, software, semiconductors, and some hardware names outperformed. Consumer and retail had pockets of strength. Retailers with expansion plans or AI-driven merchandising caught attention. Utilities and renewables also did well on project news and policy tailwinds. Energy was mixed, and financials and real estate were constructive, but driven by idiosyncratic items like filings and deal activity.
So renewables and utilities actually had a decent day. That's interesting when tech is leading.
Yeah. Analysts pointed to better visibility on contracted cash flows in renewables and upgrades around grid and storage solutions. That created a bid in utilities tied to clean energy deployment. So it wasn't just growth chasing, it was selective cyclicals and theme-based flows too.
Two quick reactions. Hold on, say that again?
Analysts are highlighting contracted revenue visibility in renewables. That makes these names look more like long-duration utilities with predictable cash flows, which appeals in a risk-on move that still favors visibility.
Got it. Let's pull apart the small-cap action. The Russell 2000 ETF was up about 0.75%. That's participation, but lagging. What does that tell us about the breadth of the rally?
It suggests early-stage recovery behavior. Liquidity and earnings visibility pushed capital into large-cap, high-conviction names first. Small caps joined, but lagged, which means the rally wasn't yet broad-based. Technical breadth improved versus recent pullbacks, but many mid and small cap names remain below key levels. Traders want to see IWM and mid-cap indices pick up steam to call this a durable advance.
So, breadth needs to broaden for confirmation. And on the macro front, there weren't any big data releases that changed the Fed outlook today, right?
Correct. No headline macro prints that shifted the policy path. The rally looked more tied to geopolitical relief and company-level catalysts. Analysts note this didn't materially change Fed expectations. Disinflation trends and labor market data remain the primary drivers for monetary policy decisions.
So traders rewarded long-duration assets today, but the Fed's path still depends on incoming inflation and employment data. Makes sense. Let's hit some notable individual stock themes. You mentioned Apple earlier. How did Apple-related news play out?
Apple's leadership announcement signaled a tilt toward hardware, which renewed interest in the device cycle. That lifted chip suppliers and component names tied to Apple. Again, not a recommendation, but analysts were watching supply chain beneficiaries for follow-through.
And the NVIDIA partner filing reminded folks of the AI narrative.
Yes, a partner of NVIDIA beat estimates, which kept the AI story center stage. But the market also showed selective behavior. Some AI-exposed stocks pulled back after recent rallies, suggesting short-term profit-taking and a focus on earnings quality.
Other standouts, banks and filings, telecom, crypto-related stocks.
There were some administrative filings that created idiosyncratic moves in regional banks, like Old National Bancorp, but nothing that sapped risk appetite broadly. Telecom and media names had positive reaction to content and distribution agreements. Crypto-linked equities were mixed. On-chain indicators suggested stabilization, which helped sentiment in that corner.
Quick one-line reaction.
Okay, not a broad crypto rally, but less panic.
Nice. Now, let's turn to technical and fundamental context. How are the charts reading today?
Technically, breadth improved compared with recent pullbacks. The Nasdaq's leadership and a close above several short-term moving averages looked constructive for momentum traders. But breadth metrics showed megacaps were carrying the move. Many mid and small cap names still need to reclaim key technical levels to validate a durable advance. Fundamentally, earnings season is the driver. The market is parsing the quality of beats and the sustainability of AI-related spending.
So confirmation will come through earnings and broader participation. Historically, the note in the piece compared this to past post-crisis rotations. Tech first, then broader market if the data lines up. Thoughts?
That comparison holds. After geopolitical easing in past episodes, risk assets rallied, with liquidity and earnings visibility pulling capital into megacaps first. The market then waited for confirmation from broader data and subsequent corporate reports. It's the same pattern. Tech leads, then the question is whether the rest of the market joins.
All right, practical stuff. What should listeners be watching next session? Give us the top 4.
1. Earnings and conference calls, especially from AI vendors, chip suppliers, and hardware companies. 2. Fed speakers and any surprise macro prints on inflation or employment. 3. Breadth confirmation. Look at small and mid-cap participation. 4. Geopolitical developments. Any reversal could reintroduce volatility.
Good checklist. A quick reminder, this is informational market commentary. We're not providing personalized investment advice or recommending specific securities. Analysts note market dynamics and provide color.
Totally. Use objective language. Data suggests momentum in tech. Analysts note selective strength in renewables. And market activity indicates cautious rotation. But any trading decisions should be made independently or with a qualified advisor.
2 short reactions. Honestly, I was a bit surprised by the renewables strength.
Yeah, me too. That was a notable part of the tape.
All right, wrap it up for listeners. What are the key takeaways from today's close?
First, markets closed up on a tech-led risk-on rally. The S&P 500 ETF was up about 1%. The Nasdaq 100 ETF rose about 1.7%, and the Russell 2000 ETF gained about 0.75%. Second, easing geopolitical headlines plus corporate catalysts drove rotation into large-cap growth, AI-linked names, and select cyclical sectors. Third, breadth improved but remains narrow. Small and mid-caps still need to confirm the move. Fourth, the Fed outlook didn't change materially today. Incoming inflation and labor data will dictate policy direction going forward. And finally, earnings quality and management commentary will be critical to sustaining this rally.
Perfect. Final little push. If listeners want more detail or have questions about anything we covered, where should they go?
Head to stockalpha.ai to ask us directly. Use the Q&A feature and we'll answer live and follow up with more analysis.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next close. Stay curious and good night.